Hi and welcome to the Market Alert for Monday 29th of March 2021. So the news for Friday is that media and momentum meltdown, that's in stocks, small caps and SPACs slammed as bond and the dollar bounces. That was really the summation of Friday. There's a serious flaw to the Team Powell and Yellen inflation scheme. There's a lot of news about inflation now. As well, I've noticed, including obviously zero hedge, and 77% of Americans are worried about soaring inflation. So it looks like it's on the way. Eventually, the Fed have got what they wanted, which is hyperinflation that is consumer-driven, to try and get them out of the mess that they've created during the last 13 years. News this week, well, it's Easter weekend coming up, so there's no news today, so the market's going to have to make its own direction. No news Monday. Tomorrow we just have the one news item where we've got consumer confidence. Wednesday we have a lot more out there, which you can see, just having a quick look through. Got the ADP change, which will be interesting. Also the final GDP as well, which is coming back at 1% forecast. Previous was 1% as well. We've got pending home sales as well, and then crude oil on the Wednesday. Thursday we've got just a couple of news items. We've got an OPEC meeting. The cartel of the oil industry will be meeting. The ISM PMI for the US. Nothing for the UK this week or the Eurozone. And then Friday we still have the news released, even though it's Good Friday. So we've got the main event of the week really is going to be the non-farm payroll and average earnings. That's what will be the market focus this week, so keep an eye on those, but no news today. Meanwhile, the yields, let's just have a quick look over the last 5 days. It's just gone to 1 month actually, so it doesn't matter. We can see that we're still what's 5 days. Let's just extend this out to 1 month actually. It's not doing that. On March the 1st day, this is a weekly chart then, so yeah, you can see that we had a 172, and I'm sure there's some sort of yield control going on at the moment, because this has come back down. Did spike back up to 168, but heading back down there as well. But keep an eye on this one, because obviously linked to this inflation. And talking of new lows, we've got a new low in the implied volatility, down to 14.13 on Friday, down from 15.67 on Thursday. So we're actually broken the low that we had before of 16.05 and heading down towards the lows pre the COVID correction that we saw last year. You can't really call it a crash because the market's back above and that's all-time highs. So yeah, the lower this number goes, the better. We are seeing some weakness overnight, so it's going to be interesting to see how they bring the market back today as well, given that we've got these new lows in the implied volatility and no news today as well. So we are due for a correction. The lower the numbers go, the bigger the correction will be. And as we kick off, we have moved the clocks forward in the UK, so we need to change the times in the software. So let's just do this first. For those of you using the Omni software, come down to settings, and we need to change the primary times only for the afternoon. We go back to 2:30 and 4 p.m. and make sure that you left click on apply down at the bottom, and then come up to file, save, and then that will take care of this. So the next time you load, you will be correct. Well, you'll be correct after clicking apply, but if you click save, you'll only need to change it the once. So let's have a look, see where we are. Let's start off with the US markets, and you can see that on Friday that we traded up to 89% from this high to this low, right to it there, 33,100. You see the market struggling with this at the moment. The prices are down on the overnight. So I'm just going to remove this one here. I'm going to remove these as well, and I'll be looking for the market to draw in a retracement from here to here. So let's just do this, and these are the fib retracement areas where you can expect some sort of support should prices start to move to the downside at any great sort of speed, or continue what they're doing on the overnight, which if we have a quick look at the 5 minute, you can see here that we had a bit of a shakeout. They seem to have bought back in at the moment on the Dow at the 200 MA in the 5 minute chart, but trading below the DP. The German DAX, I'll move over to here. Let's start off with the daily chart. We've got a new all-time high for the DAX on Friday, so let's mark this up. It continues to be stronger than the Dow, which is unusual. Normally trails, but it's actually leading at the moment. So we've got that new all-time high, taking out the high that we saw over here, which was back on the 18th of March. So we can remove this, and we'll do the same as we did with the Dow from this low to this high, just to see where the market's likely to find support should prices pull back. Interestingly enough, we've got an 89 here, which was drawn from here to here, which we can see here, and then we've got the one that's drawn in from here to here as well. So this area down here, if prices do move to the downside over the next few days, will be crucial. So keep an eye on that 450 area, 14,450 area. Coming down though, we've got the 5 bar, which is in place with the 38% retracement there. So a close below this will then see all of these other fib retracement areas potential support. Otherwise, we move to the upside, and we take out the recent high at this level here at 14,855, heading towards 15,000 if prices continue to move to the upside. So let's have a look what's happened overnight. We can see here that prices opened a bit lower. We've got the high of Friday, where the market is currently below. We came back below the 20 bar moving average, and let's just move across, and you can see that we had a bit of support there at the DP level and the 200 MA, but then prices succumbed to it, and then we've got you can see there volume there picking it up at the 14,750 level, and currently prices have broken this and traded down to the S1, but again you can see this climatic volume and cluster here holding the market as prices are attempting to move back to the upside at the moment. So from this high to this low is where I would mark up any sort of small retracement, just to have a look, and we can see that we're through 38 at the moment. 50, 62 is a very interesting one because we're at the high, at the BRN and the 20 bar moving average there, which could see prices then move back down and retest this area. So what I would be looking for is again some sort of potential weakness coming into the market, red bars in the volume, and then a close back below the 5 bar moving average, which prices are currently trading above there. So let's have a quick look at Friday. We didn't, even though the market moved up, it was a choppy session, and we kicked off in the futures market here. You can see it was a bit volatile. It was down, then it was up, then it got slammed back down, and then it became quiet as the market waited for the cash market to open. Bit of weakness there as the market traded down to the high. You need to get back above the high if you want to keep the bull market in place, keep making those new highs. And this is what we saw from the off. I had a quick look at the 1 minute chart. You could see the buying there at the high. This is in the 1 minute. And there was also a signal. Prices trading up to the BRN there. And same obviously in the 2 minute. You've got selling pressure in the 2 minute though, which stopped the market at that BRN temporarily. You can see prices pulling back and then having another run to the upside, and there you can see prices again having another move in the 1 minute as well, as they had a rest, and then that was more or less it for the 1 minute, as prices then came back sideways sitting on the BRN. And I was just drawing the fibs, but you can see how quiet the market came. It was waiting for the news. Market drifted down towards that 62%. And if I just move back slightly, you'll see the result of the news. Let me just here. And you can see this was the German info climate. It came out at 96. Very bullish in theory, because it even beats the previous and the forecast at 96.6. But no, the market didn't want to know. We had a potential buy signal where the market failed to move higher. And you can see there you've got the potential weakness already indicated at the entry price, and the market just drifted back down and stopped the trade out there. And then prices just traded in a sideways range. It became really quiet, and the market waiting for the other news that was out at 10 a.m. there, which I think, if I remember rightly, was Bailey. It doesn't matter, it was after the session, but it was a central banker. I can't remember if it was Lagarde or Bailey, but anyway, actually it could have been the Euro meeting, whatever it was. Anyway, the market was just sideways, as you can see there, barely in a 12-point range for the remainder of the morning. It stayed like this, really. The afternoon really didn't improve. The market got back above Thursday's high, and I'm having a look at the daily chart, so I'm looking at the 15-minute chart there, just to see where the market had traded. You can see how choppy it was, the market trading back down mid-morning to the previous day's high. This is where it found support, because we'd had this earlier on in the opening of the session, and prices are just being choppy all the way to the upside. So looking at this to see if we could fine-tune an entry, but the market just didn't move for the Friday afternoon there. Hopefully now we're all back in sync, and the implied volatility is making these lows. We'll start to see a lot more volatility coming into the market, because obviously if it's going down to 14%, it's showing that there's not a lot of range, which has been the case. Okay, that rounds up Friday. What to expect today, and a bit more detail of Friday's trading session there. Actually, just before I conclude, let me have a look at the silver market, because we have some interesting developments in this. Obviously, Wednesday of last week, the market managed to rally back, and I said I'm still looking for the downside on this, and I still have a buy order. This is the DAX, the DAX, the dollar, and this is why, another reason why silver is struggling. This looks like it's about to spike to the upside, which is going to send silver further to the downside as well. You can see at the moment they've obviously bought back in the last 5 minutes whilst I've been recording, but you can see how they've slammed it down again overnight. It's incredible how they can do this, given that the Perth Royal Mint is no longer, well, it doesn't have any silver, and I think the UK have stopped printing at the moment of the Britannias, and yet you can sell all of this paper silver into the market and move the prices lower, which, is fine. If you want to do that, that's fine, but I'm still expecting the market to trade down to 23 or 24, and with this I actually have the potential buy order still in there. Like I say, this is not a recommendation, I'm just looking at the bigger picture of this market. You can see where they bought in here, with the market was retested after the selling, and then it was able to move higher. We do have a new bull market in silver, but this is classic silver, and like I say, I'm expecting something like this, and certainly what we saw last year as well. And I've been going on about this for weeks, since we hit that February the 2nd high, when I said, and go back and check it, they would crush everybody in the silver market as far as speculators were concerned. Anybody trying to create a short squeeze. The banks have the power. I like a broken record, I know, but it's important. And as you'll see here, this is how silver generally ends. We have to have a big bar to the downside before they shake everybody out. And also, if the banks are starting to switch to the long side, they'll still need to shake out and buy at a lower price as well. So the lower it goes, I don't mind. We can just buy lower and then take advantage when it switches around, which it will do, because there is a complete disconnect between the physical price and market compared to what they're doing in the futures market. And this is a reflection of the derivatives. They're just a bunch of crooks been confirmed as crooks. They've been fined many times, but this is what they're doing at the moment. One thing that would be interesting to do here, I haven't got a longer term chart. Well, say actually shorter term, but I'll just do this. I'm just going to mark up here. It will come out the same in a 4-hour chart or any other chart, but so I'm just going to mark up from the low of this bar to here, just to see where the market could find some support as it works its way back to the downside there. So these would be the areas of support, but we're already through the 38 and we're currently at the 50. So again, watch for the 62, 78 and 89, which would take you back down to this low. See if there's any support coming in there. Key thing here, the market's not closed above the 5-bar moving average for the last 5 trading sessions. So we could be due a bit of a bounce there as well. But for me, I'm still looking for this to move to the downside before it moves to the upside down to that 24 level there. Okay, that's it for this one. If there is anything else to report, I will let you know. But as ever, thanks for watching. See you in the next one.